The biggest macroeconomic items on the global stage in the coming week are due to come from the UK, no less. On Tuesday the 16th of August, the Office for National Statistics will release the latest unemployment, job vacancy and wage growth data. On the 17th, it'll then follow up with the latest batch of inflation numbers. We may then get a chance to see what those numbers mean for the UK population more widely when consultants GfK release its latest UK consumer confidence reading on Friday the 19th. So to start with those jobs numbers, the unemployment rate in the 3 months to May was 3.8%. The employment rate was 75.9%, just a fraction below the pre-pandemic peaks. And job vacancies stood at 1.3 million, way above where they stood before COVID-19 struck in March 2020. That actually represented a small gain over the 3-month period, but it did reflect the first month-on-month drop in almost 2 years. So keep an eye on that. It all still looks pretty encouraging, though, given the gloomy tone of most economic commentary. However, we do have to bear in mind that employment data is backward-looking, given the lead times between firms feeling confident enough to hire and then go out and go through the tricky process of finding the right candidate. If we do start to see a softening in the jobs market, and the quoted recruitment consultants have yet to flag any such trend, you might perhaps expect to see it in the vacancies figure first. Indeed, some economists are arguing that any downturn in the UK could be a shallow one, as the huge vacancies figure will drop first before firms get round to actually letting go any staff. So the theory goes. Attention will then switch to wages. After all, if job vacancies are high and unemployment is low, then firms will have to compete to attract and keep talent. And that could give workers the whip hand when it comes to asking for terms and conditions. In May, wages surged 6.2% year on year, including bonuses. That's the good news. The bad is that inflation continues to outpace pay growth, so workers are actually worse off in real terms. We'll find out about how much when the inflation figures for July are released. In June, the annual increase in the Consumer Price Index was 9.4%, the highest rate in nearly 40 years and more than 4.5 times the Bank of England's target. It'll be interesting to see how consumer confidence bears up or doesn't in this environment, given that in July, the GfK survey reading came in unchanged at minus 41, the lowest score in the survey's history, and that goes all the way back to the mid-1970s. On the corporate front, there's a select slate of announcements due, although it should be no less informative or interesting for that. Please note that some of these dates, however, could still be subject to change. Phoenix Group and Thungela Resources on Monday the 15th, and I hope I've pronounced the coal miner's name correctly. Watches of Switzerland on the 16th, Persimmon, Essentra, Hochschild Mining and Balfour Beatty on the 17th, Antofagasta, Marshalls, AO World and Rank on the 18th, and building materials firms Kingspan rounds out the week on Friday the 19th of August. But the company which could just cause the biggest fuss in the week ahead is BHP. The mining giant's due to report its full year results to the end of June, late in the day UK time on Monday the 15th, and early in the morning or Aussie time on Tuesday the 16th. Now, BHP shares are actually still a touch higher than they were a year ago, although they're a long way below their recent peaks, thanks to their concerns over a global economic slowdown in the face of rising inflation and higher interest rates. Those worries have in turn weighed on commodity prices, and the Bloomberg Spot Commodity Price Index is some 10% off its summer peak. BHP is no longer a member of the FTSE 100 after its decision to relocate its primary stock market listing to Sydney, but the shares do still trade in the UK. The firm has 5 main product areas: iron ore, copper, coal, nickel and potash. The petroleum business was merged with another Aussie firm, Woodside, this year, and the Woodside shares that BP got in payment were immediately distributed to shareholders, so BHP has no oil and gas exposure now. The profit mix, based on adjusted operating profit from the first half of the company's fiscal year, is shown here. Iron ore and copper are the materials that really count, and they're the commodity prices you need to track if and when you're researching BHP. Now, the miners trading update in July outlined production volumes for the year just finished and also offered guidance for fiscal 2023. In 2022, iron ore and energy coal met expectations, copper and metallurgical coal reached lowered forecasts, and nickel flat out undershot. Note that all were flat to down in terms of absolute production levels. For 2023, production of copper, nickel, metallurgical coal are expected to go up sharply, while iron ore and energy coal could make progress, depending on circumstances. In terms of the headline numbers for the 12 months to June, analyst consensus forecasts are as follows. Sales of $66 billion against $60 billion a year ago, and analysts are looking for a drop to $57 billion in the fiscal year just begun, thanks to those weaker commodity prices. And an increase in statutory or stated operating profit to $36 billion from $30 billion, although then there's a drop expected to $27 billion in 2023. Also watch out for the dividend, forecast to be $3.15 against $3.01 a year ago, but analysts have penciled in a decline to $2.37 in the coming year. The number crunchers will also watch out for any comments on share buybacks. Two final numbers to watch are capital expenditure and debt. Net debt ended the first half at just $6 billion, the very bottom of the company's downwardly revised target range of $5 to $15 billion. CapEx was forecast to be $6.5 billion in fiscal 2022, and it's not due to come in much more than that in 2023 and 2024, now the petroleum assets have gone. In this context, shareholders will also look for an update on major new projects, such as the Jansen Potash project in Canada. I hope that you and your families are all in good health and good spirits. Thank you for watching, and I look forward to seeing you again next week.